What's going on, Chris here? So we're trying to discern just what's going on in the market. It almost seems like it's all bullish from here, and that's not true. So I'm just here to show just kind of the chop that we're in, and the points of when it would be bullish, and what we're looking for. So to answer that question right away, right out the gate, it would be bullish probably a close above here or whenever we get above this indicators weekly market structure break, which whatever it says is the weekly market structure break. Most likely it's like this high. Maybe if time goes like on longer, it'll be this high, like a weekly close above one of the two. But I'm gonna say right now it's above here, so we're far away from that. And if anything, we're caught between two weekly breakers. So that's the bigger range. We're just pretty much ranging, and we're almost at equilibrium in the middle. I have this moving average channel set to 10. You can move it between 10 to 20, and you can get an idea of just where resistance is. And it's pretty much like around this zone, around 4,000 roughly. If we were to put it at 20 on the moving average channel, we can get a better idea of just a longer time, and it looks like around, yeah, roughly 4,000. That one kind of looks better, anyways. But yeah, this is basically where we're sandwiched between the two. This is the smaller range. So we had a bigger range. Now this is the smaller range, and this is actually where the chop is between. And we could actually make a box here, and we could highlight it and then pass it onto the bigger time frame just to see, like, is it really holding up to where the resistance line is. So this daily breakers, and lo and behold, right where the moving average channel weekly high is roughly the end of the bearish breaker to the downside. So that's pretty much the small range we're in, that I would say that needs to be purged. If we were to move higher, we need to close above there, definitely wherever this line is. So we got maybe, it looks like, roughly 1 to 2% on the upside. So that's kind of like the struggle is determining, okay, is the upside worth chasing after? And right now it's uncertain. We're kind of in the middle of no man's land. No man's land I would define as between the moving average channel high and low. I mean, it could go anywhere in this area, and it's just where it matters is where it breaks out and closes. And the thing is, we are uncertain just where that will be. So we're gonna go ahead and just kind of break it down further. So obviously, we looked at this smaller range of the two breakers in the no man's land that we highlighted, and then we also highlighted this fair value gap, which is a big engulfing, and then the previous candle's wick low, and the previous the candle after the engulfing, the wick high, and then the gap in between. So that's usually a magnet. So we want to see what happens when price comes into here. Does it get rejected or does it get filled? And I'm thinking, with the end of the the daily breaker to the downside is here, we would, we would assume that this will hold. So technically, we could measure here to here, and we can get a more specific idea of how much is to the upside, 1.78%. So, and then if we wanted to also put on some like moving averages, and we're kind of curious like where things are at. So it looks like the 150 is coming in daily, is coming into the top. The 72 is meeting it in between these two levels, roughly around 3,936. And if we were to say that that is like our point where we would short, it's roughly 0.5% away from where we are currently, like maybe even less than that, roughly 0.31%. 0.31%. So, we got some like near term targets for just like points of interest, 72 moving average, or the fair value gap low, or the end of the daily breaker to the downside. But you can see from a high time frame just how things are kind of confusing. We're caught between these two weekly breakers, and one of them is going to be correct. We're waiting for an alignment of all the time frames to be in one direction. Right now, they're all in alignment to the upside, except the weekly. The weekly is still bearish until we close above, this wick high, or like this close up here. So on the high time frame, we're bearish, but on the H4 and H12, they're both bullish. So right now we have to expect more upside bullishness. And it looks like we could get anywhere from 0.3% to roughly 3%. And I don't know, it doesn't seem like a whole lot, to be honest. And if that's what it takes for it to roll over, so be it. I think I'm better off keeping my positions where they're at. I think I made a good high cost basis by just reconsolidating all my positions to like max capacity right here. So we need kind of more information to determine what to do next, because we could assume that so what's weird is like on this daily we got 39 11 25, and then here on a smaller time frame we got 39 23. But it's the same exchange, it's just for some reason on the daily it shrunk back. So I have no idea what's really going on there. I mean, we could just put on the SPY and just verify it. 389.05, 389.02. So I don't know why that there's a discrepancy in there. It's just really weird. 389.02. So it looks like on the daily and the weekly it's 389.02, but on the H4 it's 389.05. So I don't know. It's weird. I have no idea how to make sense of it. But if we were to go off like the daily high, it looks like it broke. It closed above. So that's kind of just the best we can go off of. We kind of have to wait for Sunday market open just to see what's going to happen. Like if we get a retest in this H4 breaker to the upside, that would be nice, because then maybe I would actually consider dumping my short position. I don't know. It's just really weird. Just to get a few extra points of alpha, I'm actually kind of happy where it's at. Like I don't think it's gonna move too far away from where I decided to go short. Like I went like almost 60% short here, roughly around here, and then I went a whole full 100% short here. So like I added more to the short side once it got up there, and that's basically it. And it's either I really try to squeeze in that extra 1 or 2% alpha, or I just like wait. I just sit and wait and let it play out. Other milestones to watch for, of course, would be like a close above the daily close on the up candles. So the next one is this one. So we're looking to see if it closes above there, and then on a smaller time frame, we're specifically looking for liquidity to be purged around the H4 or the H12. If we open up the H12 and look at the liquidity there, that's too much. So we either got all the way up here, which would be too far up. It would be above this fair value gap here on the H12, and it would be above the moving average channel high. So I mean, we could still go up there, but it's less likely. It's more like a 10% chance. or 33% chance. I put it on the small blind. So that leaves us with the H4. We want 3. So this one, if we purge all these, that would put us right at the fair value gap. So that's kind of we're expecting a purge of this liquidity and then a reversal when the 150 comes down. So we're probably expecting some consolidation. 150 daily comes down into what we're expecting the CPI on November 10th. So we're expecting a lot of consolidation and then finally a purge and then a rejection in some way. We look at timing solutions. It looks like if we were to take the hard cycles down here, the decennial, the annual, and the 4-year, we got a reversal point looking like around the CPI date. So it looks good for a reversal to the downside. Now this fast cycle, AI cycle, might change on Monday. We have to wait and see the closer throughout the week we get. But this might be just more, predictive of maybe the consolidation before the launch, and then it has to. So this fast AI cycle changes intra-week pretty fast, and we're gonna see next week what it says. But I think this hard cycle is correct, and that coming into the CPI, we're going to be looking for rotations to the downside. We are bearish on the high time frame weekly market structure, and within the range that we're caught in between, we have our points of interest, which is basically the H4 purge of liquidity on those bearish order blocks. Also, this daily close high, and then also the what's it called, daily bearish order block breaker or bearish breaker, and this moving average channel high on the 20 on the weekly. So doesn't look like it's got a whole lot of upside, but something to keep in mind for downside risk. Still downside risk, and specifically on the high time frame, if we were to turn on the order blocks for liquidity and where it would want to go, it's more likely to want to go here than it is to go here, just because with the just overall negative sentiment, whether it's the banks, the consumer sentiment, Michigan survey, or XLY versus XLP looking terrible, discretionary versus consumer staples, the whole risk on, risk off is not looking that good. The only thing that's really keeping it up is junk bonds versus TLT, JNK versus TLT. And then credit spreads, HYGH. I think that's it's just HYGH. It's looking pretty strong right now, and we need to just do its term, just get overbought, let the dollar consolidate and reclaim, or figure out what's going on with the currencies. But with this strong kind of show of force in the bulls, it's really giving the Fed an incentive to be like, yep, they're not done yet. We need to squash it. We need them to capitulate. They don't look like they've capitulated. They look like they're back in full force. That the CPI is still going to be high, and the market is also a good tell of what the CPI reading might be. And from what it's saying, if the market is strong right now, then the CPI is probably going to be strong too. This is more of a quote taken from Larry Williams and his study with cycle theory and the CPI, and just its relation to the movement of the market, and just how they're related in some way. So I think that I hope that kind of revealed just kind of what's going on. I basically boxed out the no man's land, and we could also see it by this moving average channel, 20 on the high and the low, and just kind of what we expect to happen next. A purge of H4 liquidity on those bearish order blocks, and then possibly a reaction around after it finishes purging liquidity to maybe go to the downside and really trap some bulls around the CPI date. So it almost looks like it's choreographed in some way, but catching these moves is one thing versus another. Like I'm watching some of these people on Twitter. They're really hyping up. The ICT. What's it called? Smart money concepts of fair value gap, and like this is the first time I've really focused on learning fair value gap, but these people are a little cultish, and I just decided to look at it and took what was valuable. What was valuable is that these things are like magnets. They're like a target. Price will be drawn there for equilibrium, and then after it goes after these gaps, it's going to want to take liquidity, and that's in the form of the order blocks, and that's pretty much all you need to know. To keep it simplest, the best that ICT, the Smart Money Concepts, has is the breakers, because it just makes it so simple of like, oh, okay, we're bouncing between these two breakers, and then we could go down in smaller time frames and just see like where is it caught, where is it bullish, and where is it bearish, and we're able to just get a more contextual idea of just really what's happening. And I hope that I was able to explain all that. But there is a bullish order block, a bearish order block here of liquidity. The question is, are we going to be able to reach it? That's a very interesting question. We need to see a weekly close above that moving average channel high to be able to really say we're going farther. But it is kind of questionable to see. We're getting close to being exhausted in the RSI, and any further, like we could be in danger of reversal on the daily, and then with us getting closer and closer to that date of November 10th, it's going to be a higher and higher chance of reversal to the downside, just because if the market keeps going up, it's almost suggestive that our CPI will be strong. It's a green light for the Fed to hike rates in a strong way. That would pretty much be an upset for the market. But a lot of people are trying to put this narrative out there, like that the Fed is tightening too much, and that it's bullish because of the debt or the bad outlook. And I don't know. I think that's kind of a narrative that you bought into cultishly. Like, there is no confirmation that it is that way. The only confirmation really is market structure. That's it. Based upon closes, on opens, closes, highs and lows. Like, that's pretty much it. That's all you need to know. And right now, it comes down. There is no real fundamentals other than what's bearish, and then there are a few bullish, which is the credit spreads, the high yield growth, corporate junk bonds, and then the junk bonds versus TLT. Those are the only two that are bullish. The rest are bearish. So for the most, obviously there's that statistic of what happens after the election, but the year isn't over yet, and if we were to even just bring out the S&P 500 PE ratio, is overbought. Still overbought. We haven't even hit the mean or median of the multiple. There it is. We haven't even hit the mean or median. We're at 20.29. Haven't even gotten close to touching 16 or 15. So, and then not to mention institutions are bearish right now. We're almost overbought on the daily sentiment. Definitely overbought on the weekly. expecting a reversal, maybe to go retest that H4 breaker, and I don't know, maybe to like prevent my portfolio performance from like cratering so hard, maybe I'll sell some shorts and I don't know, go 1/3 short or something. I don't know, and then go 2/3 long or 55-45. I have no idea. I might do something like that just because might as well take advantage of what I'm seeing on a pullback. Might as well flip the portfolio, and then uh, it's starting a new month. Might as well go after that alpha while it's still there. So that means I have to kind of search for some risk premium harvesting. Really dig through what's got some room to the upside that could really give me some money or some profit, and it might be in crypto. It's what it seems like is going to be, and then I mean, you just hear about Dogecoin. Like I was this close buying Dodge last week. I was so close. I just didn't see a good pattern, and it or it didn't see I didn't see any upside that I could really benefit from. But we'll see how it goes. I pretty much laid out. So the near term, I do expect this H4 breaker to get retested, just based upon what we saw on. So let's get rid of these order blocks because this is just taking away from the main point. Because this institutional bias is short, I do expect it to retest here. I have no idea how the reaction is going to be, but I'll be watching closely. I think basically the order block would be purged if it went all the way down here, but I think if we were to take a look here, it's roughly at the bottom of that green wick. It looks like, and that's what we'll do. This green wick, I think, is right here. So we're gonna look for a nice retest into here. Get rid of the short positions. I think the portfolio would be okay, and then go long, and then ride it, purge those H4 liquidity areas. Oh, I guess when I'm in there, I can't open this. Purge those H4 liquidity areas. Roughly, if I were to buy right there, roughly 4%. Yeah, I'll take it. I'll take whatever I can get on the alpha, and hopefully it purges that liquidity right there, makes a deviation, comes back, and gets back under the 72. That's kind of just the near term expectation. Retest, pull back, retest the H4 breaker to the upside. Still got some room on the RSI, nice and comfy up into the 150. Purge this liquidity, and then possibly put in some kind of deviation break on market structure in some way going into November 18th, November 10th, which is like right here. So it's not too far off, and it's totally easy to see as possible because this is going to want to get purged right here for releasing money, buying, selling, releasing, I guess, pressure or energy, releasing energy to build up for a downward movement. So that's kind of what I see. And when it comes to, I guess, the fundamentals for the short, I'm going to go short, the really strong coins like ETH and Ethereum Classic. I've been looking at other ones like Solana, Cardano, and looking to see kind of like targets to see if it's actually worth it. And definitely shorting oil in some way. I could see it going down with real rates still high. Short gold, short real estate. I could see like a 20-30% drop on both of those. Home builders, I don't know. I'm hoping that one can go down as much as the SRS, or go, have as much profit as the SRS. In the same way, I'm just not sure how home builders will react comparatively to SRS. and then of course, shorting SPXS. But that's the plan, and once it all plays out, we're gonna regroup and form some kind of fundamental stock theme, to go to the upside. And it's most likely going to be energy. Let's see, we got all these different ones, but there's chemicals for natural gas, and that also including um, Mosaic, MOS, NTR, fertilizer stuff, natural gas, and oil companies like ExxonMobil or COP, ConocoPhillips. But that's kind of the way we're gonna lean towards, as far as like after we hit a bottom and for a second leg of inflation. But we're really excited about these thematic investing portfolios, and then optimizing them in some way to get the most profit out of each company and stock, and to bring that alpha. But yep, it's playing the, I guess, the market structure, the trend, and then the alpha with the companies, and the Sharpe ratio and everything, and the sizing, and the portfolio number of stocks to all bring that magic alpha number to make us first place. So we'll wait and see. Maybe we'll go some crypto too once we hit the bottom. Something that looks good, that looks like it can recover off those lows. So we'll do some research on that. But I think that's pretty much it to explain just kind of the craziness that's been going on.